day after its shock profit warning and mass job cuts announcement, Qantas shareholders have been handed some more bad news.
Credit agency Standard & Poor's has downgraded the airline's ratings to junk status. And joining us to explain what that means is SBS Business reporter Ricardo Goncalves.
Well, Anthony, basically means it'll be harder and more expensive for Qantas to borrow money. Standard & Poor's has lowered the company's credit rating one notch to BB+ with a negative outlook, and that essentially means its investment grade rating no longer exists. Qantas expected this move, once again blaming an uneven playing field in the aviation market for the unprecedented pressures facing the company. Now, in a statement, it adds that it retains a strong financial position, including a large cash balance and a significant asset base. But analysts expect some of those assets to be sold.
I think most likely is that they won't be selling profitable assets such as Jetstar and the frequent flyer program. They're more likely to be trying to shore up their balance sheet by selling aircraft terminals, maintenance terminals and so forth, and trying to monetise those.
And Qantas says it will update the market on its structural review in February. It's been a pretty rough ride for long-term shareholders, with Qantas shares worth around $6 in 2007. Back then it was close to being taken over by a Macquarie-led consortium offering $5.60, which was very narrowly rejected by shareholders. It hit a low of 96 cents at the time of the unprecedented fleet grounding sparked by union disagreements, and today it closed at $1.03. Let's take a look at the rest of the share market now, which fell around 2.5% this week. But today, though, the All Ordinaries Index declined 0.1%. The miners were mixed. Westpac was the only one of the big four banks to close higher. The owner of Channel 9, Nine Entertainment, made a lacklustre debut on the share market today, while the rest of the week's new market entrants were mixed. In Japan, the Nikkei ended higher after 2 days of sharp fall. Shares on Wall Street finished lower. The Aussie dollar is in a holding pattern against the greenback ahead of the employment figures out of the United States later tonight. And on the commodity markets, gold is down while oil is up a touch. And speaking of oil, the ACCC has moved to level the playing field in the petrol industry. Woolworths and Coles have agreed to cap their shopper docket fuel discount offers at just 4 cents per litre. Smaller fuel retailers had complained that they couldn't compete with the supermarket giants, which periodically offer petrol discounts of 8 cents or more, because those discounts were being funded from other non-fuel parts of their business. It's been a very busy week in finance.
Sure has. Thanks, Ricardo.